Have you ever dreamt of becoming a millionaire? Well, I bet you have. Imagine having a whopping $1 million in your bank account. It might sound like something only grown-ups can achieve, but what if I told you that even a 10-year-old can start their journey to $1 million? Welcome to Financial Literacy. Here, we are dedicated and passionate about bringing you nothing but honest and straightforward facts about your money. We will help you take control of your finances and get you to the next level. Beginners or experienced, this is your one-stop shop for all things financial literacy. In this video, we will help you start your journey to $1 million. Investing can be scary, but if done right, you can achieve it and open yourself up to more opportunities you never knew were there. This video will serve as your roadmap. We made it very simple. So, are you ready to become a millionaire? Let's start the video. First off, I want to congratulate you for starting your journey to become a millionaire. A lot of people want to be one, but only a few have the guts to put in the work. So, what's the first step to become a millionaire? Setting financial goals is the first step in the process of creating wealth. These goals act as benchmarks to track your development and give you the drive to continue being dedicated. Without a clear strategy, traveling without a destination in mind is like driving while wearing a blindfold. Once you've set your financial goals, it's time to start saving and budgeting. The key here is to spend less than you earn and save the difference. To make it easier, you can set up automatic transfers to your savings account so you won't even miss the money you're putting away. Budgeting doesn't have to be boring. Find creative ways to cut expenses and make it fun. It's important to save some cash for unplanned expenses. So setting up an emergency fund is essential, because life can be unpredictable and you don't want to be hit by unexpected expenses. In case of emergencies, experts suggest having 3 to 6 months' worth of living expenses saved up. Next is getting serious about your debt. For many individuals on the path to $1 million, debt is a frequent problem. But you don't have to let it stop you from reaching your financial objectives. Yet, it can easily do so. To help you take your debt seriously, consider the following important points. Paying off high-interest debt. High-interest debt can be a major financial burden. By paying off high-interest debt first, you can save hundreds or even thousands of dollars in interest charges. Start by paying off credit card balances with high interest rates. Managing and refinancing student loans. Student loan debt can be overwhelming for many people. However, there are strategies you can use to manage your student loans. Consider refinancing your student loans to lower your interest rates and monthly payments. Don't forget to avoid credit card traps. Although credit cards can be handy, they can also be a trap. High interest rates and fees associated with many credit cards can quickly mount up. Always pay off your bill in full at the end of each month and refrain from making irrational purchases with credit cards. And one more tip. Don't get credit cards unless you really know how to use them. You will thank yourself for it, trust me. Next is to invest for the long term. You may have heard of this non-stop already. The one simple truth about investing is that time is on your side. You will do better if you get started as soon as possible. Why not now? Invest now, then unwind and watch compound interest work its magic. Compound interest is like the investment equivalent of a treasure box. To put it simply, it refers to earning interest on interest that has already been earned. Your interest earnings increase in size the longer you give your investments room to develop. Your money will increase over time, and you will be shocked at how quickly. Not all of your resources should, however, be concentrated in one area. Invest in a variety of equities, bonds, and mutual funds to spread your risk. It's a wise decision to get advice from a financial counselor or do your research. Don't be hesitant to do either. Are you good so far? We still have a lot in store for you. At this point, I'm sure you're a click away from entering how to invest in the search bar. But hold up, we will give you some investment options to start with. We also have videos here on how to invest while you're at it. You can watch them after this video. Alright, now back to the topic, and let's start with stocks. Stocks are ownership shares in a company. When you invest in stocks, you're essentially buying a piece of that company. Bonds, on the other hand, are loans that you make to companies or governments. And mutual funds are a bundle of different stocks, bonds, and other investments. However, before you begin your own investing, you should consider if you are comfortable with the concept of DIY investing or whether you require the assistance of a financial counselor. DIY investing might be practical, but it also necessitates much study and knowledge. While working with a financial advisor may be more expensive, they can offer experience and direction. The effects of your investment's taxes should also be taken into mind. While other investments can be subject to greater taxes, some might offer tax advantages. To ensure you're choosing the most tax-efficient investments, it's crucial to conduct research and speak with a financial expert. All right. Now that you've set yourself on the path to becoming a millionaire, it's important to stay focused and disciplined. This means monitoring and regularly adjusting your portfolio to ensure that it aligns with your financial goals. It's also important to avoid emotional investing because making impulsive decisions based on fear or euphoria can lead to costly mistakes. You can prepare for market downturns by creating a diversified portfolio that includes a mix of stocks, bonds, and mutual funds. It's important to remember that investing is a long-term game, and the biggest gains often come from staying committed to your strategy through market ups and downs. This doesn't mean you shouldn't make changes to your portfolio when necessary, but it does mean that you should avoid making rash decisions based on short-term fluctuations. By staying focused and disciplined, you will be well on your way to reaching that $1 million milestone. Remember to take regular stock of your progress, adjust your portfolio as needed, and avoid emotional investing. With a little bit of patience and perseverance, you can achieve your financial goals and secure your financial future. Well then, there you have it. You've completed your inspirational adventure on the road to $1 million for the intelligent investor. Pat yourself on the back. You now possess the knowledge about money and the effective tactics needed to pursue your goal of becoming a millionaire. So be sure to always keep in mind that every action you take and decision you make on your financial journey puts you one step closer to that amazing achievement. You may encounter bumps along the way, but with your newly acquired knowledge and perseverance, you're on the right track to realizing your millionaire ambitions. Continue and let your financial adventure reach a whole new level. Thank you for watching. If you like this video, please don't forget to give a thumbs up, comment, and hit that notification bell so you don't miss out on our following videos.